I bought PayPal stock this past week, adding to a position that I already had previously. In this video, I'm going to tell you what I like about the stock right now, some things I'm watching, and if you stick around, I'm also going to tell you what I think the stock is worth. Welcome to the Stock Sale Flyer. My name is Aaron. None of this is financial advice and it's all time sensitive. Let's get into it. I'm not going to spend a ton of time on the business piece because most people know what PayPal does. They offer payment solutions. Most people are familiar with Venmo. They're familiar with their pay later options, with their rewards options, their crypto offerings, their credit and debit card offerings, their savings accounts, all these different things that PayPal offers as payment solutions and just fintech related or financial related things. They also own Honey, which helps people find deals online. And there's obviously other pieces of the business as well. Most people are not shocked when they see this chart because I think it's a chart that a lot of people, especially in value investing communities, have looked at. But PayPal has taken a real beating in recent years in terms of its stock price, really going all the way back to 2021. This is an article from November 9th, 2021. PayPal stock is having its worst day in 20 months after a disappointing revenue forecast. Another one from 2022, PayPal stock closes down 24% in worst ever trading day. And so we really got to look at what is the reason for this decline. And I think a lot of it has to do with fear, uncertainty, and doubt around the stock. It is true that they do face more competition than maybe they had previously. There's a lot more payment options now than there ever have before. Or ever have been before. This has really weighed on the stock price as they face this increased competition. But PayPal has continued to grow revenues. In the most recent quarterly report, revenue increased 9% to $7.7 billion, 10% on a currency neutral basis. GAAP EPS also increased 18% to 83 cents a share. And the CEO noted, "We delivered a solid set of results in quarter one, and I'm encouraged by the progress the team is making against PayPal's go-forward strategy and in strengthening our foundation. 2024 remains a transition year, and we are focused on execution, driving our key strategic initiatives, realizing cost savings, and reinvesting appropriately to position the company for consistent, high-quality, profitable growth in the future." So the company is still growing revenues. And one of the things that I do like about PayPal right now is that it does seem they are focused on driving efficiency. You know, one of the things that people have been concerned about is the number of active accounts has seen some decline. You see in the most recent quarterly update, they did see a negative 1% growth in active accounts year over year. And so this would be a negative for the business. And this is a part of what is scaring or has scared some people away from the company, which has led to the share price declining. However, aside from the decline in active accounts, they have continued to grow revenues. You see here, total payment volume was up 14% year over year for quarter one 24. So the company has continued to grow, and they have become, from what I've seen, it seems like they've become more focused on efficiency. And as you're going to see, they're continuing to add things to the business that I think will have PayPal positioned to continue to grow into the future. And even if they are losing some customers, I think that they will continue to find revenue streams and new ways for growth, and maybe even add some customers, as you'll see here in a minute. Now, when we talk about some of these problems around the business, you can see some of this perception problem here. PayPal stock has taken a hit. Gen Z and Apple are part of the problem. And this headline from Barron's, PayPal holding stock dropped after Mizuho analysts cited concerns about competition with other payment services such as Apple that are more popular with young people. You have companies like Block, also with the Cash App and things like that. This article is from back in January. But interestingly enough, Mizuho just issued a upgrade to PayPal stock this past week. They raised their price target from $68 to $90 a share. And so I think we're starting to see sentiment around the stock change some. And I think you can see that reflected in some of the price action. And part of this is also driven by some of the news. The firm cites the company's newly introduced Fastlane product as a part of the reason for its upgrade. And I looked into this product, and I guess it has to do with processing payments while online shopping. It seems like a way for you to process your online payments faster when you do online checkouts. So they have raised their price target. When you go take a quick look at the PayPal website, there's some things on here that I really like that I think is going to help attract customers. First of all, they're really focused on pushing rewards out to their customers. They offer a really nice cashback credit card, and this offers 3%, which is really solid for a cashback credit card. And they also offer other payment rewards or other rewards kickbacks if you use their products when you buy things. I also think that their high yield PayPal savings account is really competitive at 4.3% APY on a high yield savings account. That's pretty competitive. It might not be the highest rate you can get out there right now for a high yield savings, but it's pretty good. And when you combine that with the rest of the ecosystem, I think that these are things that will help to attract customers and maybe turn around that contraction in active accounts that has been happening in recent times. Another thing that I like about the business is they've really leaned into cryptocurrencies lately. No matter what you think about cryptocurrencies, there's definitely a market there. And being a fintech company, they should be doing this. And PayPal actually has its own stable coin, and it's now available on Solana. I think it was available on the Ethereum blockchain before, and now it's available on Solana. So this is a way that PayPal is leaning into another market. You can buy crypto through your PayPal account, I think right on the app. So this is another place that PayPal has expanded their business in recent years in the fintech space. And if they're going to compete with other fintech companies, this is something that they're going to need to do. Also, a piece of news that came out last week that was really bullish to me is they're going to use customer data to create an advertising platform. And when you think about companies that make a lot of revenues from advertising like Google and Meta, PayPal's got a lot of data. And what I really like about this is it's directly connected to customer purchases, which is going to make that data very valuable for potential advertisers. So this is actually something that had me really bullish this past week. I'm really excited to see what they're doing or what they're going to do with this advertising platform. And I'm honestly surprised it's something that they haven't done yet. But I like that PayPal is looking for ways to grow the business and continue to drive revenue growth. And honestly, this could also improve their margins, I think, going forward. All right, so what do I think the stock is worth? For 2024 expected fiscal year, you can see I have 7.51% revenue growth expected. And then the 2025 fiscal year, I have 8.26% revenue growth expected. These are based on estimates I found from Ticker. They seem reasonable. You see last fiscal year, they did 8.19%. The year before that, their revenue growth in the 2022 fiscal year was 8.46%. So I think that this is reasonable revenue growth. And I didn't get over my skis here with the advertising business and the amount of growth I think it could bring. I think it could bring a lot of growth, but I didn't want to go too crazy thinking that it was going to grow the business extremely rapidly or anything like that. So I did taper down revenue growth. I am factoring in for the increasing competition that they face in payments. And even if this company does tail off, that's factored into this valuation. So we have 7% revenue growth in 2026, 7% in 2027, 6% in 2028, 5% in 2029, 5% in 2030, 4% in 2031, 3.5% in 2032, 3% in 2033 fiscal year. So the revenue growth, I did have that gradually declining over the next 10 years. In terms of net income margins, to factor in the net income, PayPal guided to $3.65 GAAP EPS in Q1 2024 in the Q1 2024 earnings release. So I took the shares outstanding from B18 here, B18 cell, which is the shares outstanding from the most recent 10Q, and I multiplied that by their EPS, their GAAP EPS estimate, and that's how I got this net income number, which would result in a net income margin for the 2024 fiscal year of 11.93%. Following year, I took that shares outstanding number and went to Ticker's GAAP EPS estimate of $4.36 from June 2nd, 2024, and I use that to calculate the net income number you see here, which leads to a net income margin for next year of 13.16%. And I think that this could make sense. I'm not sure if these analyst estimates are factoring in the advertising business yet. If they aren't, then that would make this conservative actually, and we could maybe even get a little bit more bullish, but I'm not going to do that yet. So 13.16%, I think. When you think by 2025's fiscal year, hopefully they've got that ad revenue coming in, and that's going to help them improve their net income margin. I think that that's reasonable, and they could even exceed that. I went with 13.5 each year going forward, considering the advertising business that they're adding. And again, I think that I could have gone more aggressive here with the net income margins, but I didn't want to get too overly aggressive, thinking that they're going to start all of a sudden having like 16%, 17, 18% net income margins. Although, to be honest, if they did that, I would not be entirely shocked. I think that the advertising business that they're adding, it has a lot of potential. So I'm not building it in yet. I'm kind of in wait and see mode, especially since I don't know how much it's going to cost them to get that business going. But I do think that there's a lot of growth potential in that. And so I did want to factor that in here at least a little bit. Now, in terms of free cash flow to net income, you can see I have the ticker estimate from June 2nd, 2024 here. I thought this was reasonable. Q1 2024 showed growth in net cash provided by operating activities of 64%. So this growth in free cash flow did seem reasonable for this fiscal year. And then for next year, I also have ticker's estimate as well, which would, for the 2024 fiscal year, be a free cash flow to net income of 147.72%. And then for 2025, you'd have 124.31%. And then going forward, I went with 120% free cash flow to net income. I think that could be conservative. I think that it's possible they could do better than that. But I thought that was a pretty good balance that was realistic based on the new advertising business they're adding, what they've done in the past, and what I could expect from them. So that is what I decided to go with for a number there. Perpetual growth rate, I went with 2.5%. You can see the total shares outstanding from the most recent 10Q are what I used here for the shares outstanding. I expect that number to continue to decline as they buy back shares. So that's something that you also have to think about with this company going forward. In terms of their weighted average cost of capital, I got 10.78%. You can see the inputs that I used for that. The way that I had to do some digging to get an accurate representation of their debt because of the way it gets reported for them. S&P Capital IQ is a really cool tool that I use sometimes that seems to do a really good job with looking at what a company's actual current debt and long-term debt is when in terms of how I would factor them into these valuations. And so I had to do some digging because I got those numbers. They're a little different. The way that this gets reported in some of their filings is a little different than most companies I look at. So I had to kind of look into it and reconcile it. And I was able to reconcile those debt numbers to the S&P Capital IQ numbers that I had there. Now, some people, and you can pause the video if you want to see the notes I put in on this short-term debt number, but you do hear some people say that PayPal has no short-term debt, or you might hear some people say that, because I don't think they actually report any current debt right on the balance sheet in the 10K, but there is some when you look under the surface a little bit. So that is something that I kind of had to do some digging for, and I was able to find what I think would be the accurate numbers for doing this kind of valuation for the long-term debt. And then there's $416 million in operating lease liabilities, which is on page 82 of the 10K, and that equals $10.092 billion, which matches the number from S&P Capital IQ. 10-year bond rate I used, beta I used, market cap I used. So you've got a 10.78% weighted average cost of capital, which is my required rate of return. And I get a fair value of equity of $73.32. Again, depending on how the advertising business affects the company, I could see this being conservative, but we'll see what happens. I think that is at least a fair to conservatively fair number right now. And as you can see, PayPal closed May 31st, 2024 at exactly $63 a share. If we go forward, if PayPal can trade at a PE of 20, you're looking at $108.54 a share if this net income assumption for the 2028 fiscal year holds true. So after that 2028 fiscal year, with a PE of 20, it would be $108.54 a share. At a PE of 25, it would be $135.67 a share. But that's with no change in the shares outstanding in cell B18 here. And I think they're going to buy back a lot of stock between now and then. So for me, as someone thinking that they should be trading, they're not right now, but if they show the market what they need to have some multiple expansion here, I could see PayPal going back to 20, 22 times earnings at least, if not even higher than that. And that with some share buybacks would equal a doubling my money in 5 years off of this current valuation. So doubling the current share price would be $126, which you can see is between that PE of 20 and that PE of 25. Going out after the 2033 fiscal year, PE of 20 would be $132.67. PE of 25 would be $165.84. But again, I think they'll buy back a lot of stock between now and that 2033 fiscal year. So, after that fiscal year, if there was no change in the shares outstanding, that's what you'd be looking at those multiples. But I see a lot of buybacks coming between now and then. At least that's what I would assume will happen. Let me know what you think of this valuation. Drop a comment, like the video, subscribe. Follow me on X at Stock Sale Flyer if you haven't done that yet. I'm always talking about markets and things over there. And I think I actually told people over there I was buying PayPal, or I had bought in some PayPal last week before this video even came out. So sometimes, the most recent updates on things I'm doing, I'm posting them on X. So make sure you follow me over there. And yeah, as always, thank you for joining me again today. Bye.